What's good, family? Welcome back to the channel. It's Samaje Trades. In today's video, we're taking you in the next step of your trading journey. Last video, I showed you how to navigate TradingView and set up your charts. Now we're going to go ahead and move forward and build onto that foundation. Today, we're breaking down candlesticks and price action, which is the real language of the market. If you've ever felt confused about what candlesticks mean, why they move the way they do, what's the real story behind them, this video right here that you're watching or about to watch is going to clear all of that up. By the end of this session, you'll learn how to spot momentum, reversals, and continuation setups by just reading them. No guessing, no overthinking, just pure market structure and clean price action. So lock in, hit that like button to support, and let's get straight into it. Each candlestick on a chart is more than just a shape on your chart. It's a story. Every candle shows 4 important pieces of information. It shows the open, the high, the low, and the close. That's the battle between buyers and sellers. Now, before we move forward, I forgot to mention that in the last video, there are settings to where you can change your candlestick colors. You can also come in and change your canvas, the background of your screen. So if you just come down here, right here in this area, tap the settings and go to look at your settings from here, you'll be able to see everything. And then from here, you can change how you like your settings. Okay, so for these purposes in this video, we will just be dealing with red and green because those are the color candlesticks that you see when you first open your chart. But as you saw previously before, my candlesticks were a different color. Okay, what we see here is a bullish candle and we see a bearish candle. Before we dig deep inside into what these candlesticks really show, there are some things that we have to cover first, and you need to know the different parts of a candlestick. Covering the very first candlestick, which is a bearish candlestick, which means market is going down or probably just has a little pullback, you'll see red candlesticks or whichever color candlestick you choose. But basic, this is a bearish candlestick. On a bearish candlestick, price always opens at the top and then price closes at the bottom. These lines here that are on the outside of the candlestick, those are called wicks. And all wicks do is just represent where price went throughout the movement of that candle. Now, when we think of wicks and wonder why they mean so much, it's because it really just means that when we opened up and when we closed, before that point, price came somewhere in between here, didn't like it, and closed here. Okay, so that is all wicks show. If you just want to think of it real simple, again, wicks are just where price went before it closed. Okay, so we're on the 5-minute time frame right now. So this 5-minute time frame, we're just gonna look at it as this is a 5-minute bearish candle. During these 5 minutes of this candle moving, this whole body, right, just shows how price was moving. Right now, a bullish candle is slightly different from the bearish candle. And the difference is that on a bullish candle, price always opens at the bottom and price always closes at the top. This is the 5-minute bullish candle that we're looking at. And these wicks are just showing where price went. So for an example, price opened here. Before we closed, price fluctuated a little bit to the top and actually decided to close at this point. Now, another way that we can think of candlestick structure or just candlesticks period, we can think of it as if the candle closes higher than it opened, it's bullish, right? Now, if the candle closes lower than it opened, it's bearish. Sellers took control in that position, okay? And then again, wicks, they just show rejection. It shows where price went but couldn't stay, all right? So once you understand this, you can stop guessing and start reading exactly what the market is telling you. Let's go over the most important bearish candles that you'll see on your chart. First, what we have here to the very left is the bearish engulfing candlestick pattern, which shows a very large red candle that swallows the previous green candle. Basically, it just indicates strong selling pressure. So when you see this in an important zone or somewhere on the charts that is showing you confirmation of a short bias, it just basically shows strong selling pressure. And sometimes people use these type of indications or signals as a reversal, as a potential reversal. Okay, now what we have here next is the shooting star. which is a very, very long wick at the top with a small body, right? It just shows and indicates that buyers tried to take price further than where it was and sellers shut it down. Our third candlestick pattern is the bearish inside bar. Basically, it's like a pause in the market before a potential drop or a potential reversal, okay? This last candlestick that we have here on the end is called a doji candlestick. It's not really a candlestick pattern that is bullish or bearish. It really just shows indecision in the market, okay? So if you see this type of candle in a zone, anywhere in your area of confluence or anything like that, and it's showing indecision, sometimes it's better to stay away from that side. Or in other words, if you see this and then one of the other candlestick patterns, then it could add to some type of confluence. But just to keep it real simple, I just want you to know that a doji candle just means indecision in the market, right? Price didn't know if it wanted to go up or if it wanted to go down. A lot of times you will see this happen on the higher time frame. You may have like a trader may say, oh my gosh, there's a 1 hour doji candlestick. That's indecision. That it is crazy to see on higher time frame markets. Okay, so doji candle, we're just thinking of straight indecision in the market, guys. Market is confused on what it really wants to do when we see these type of candles. All right, chat. So we are done with candlesticks. Now it is finally time to move into the fun stuff and get into the charts just a little bit deeper, on a deeper level. Now what we're getting to is one of the most favorites that we need to understand why the markets move the way they do, which is liquidity. And liquidity has a lot to do with price action. Let's go ahead and break down price action first, and then we'll move forward into liquidity. Now, price action consumes of a lot of trends, support and resistance, momentum, market indecision, and a lot of other market context based rules, or whatever the case, whatever you may call it, guys. So let's go ahead and hop in and get into price action, and let's just keep going. Before anything else, we need to understand market structure, because market structure tells you the direction of the market, right? So in an uptrend, price makes higher highs and it makes higher lows. So here in the green with this path that we have here, we have an uptrend, right? So if we have our low here down here at the bottom, this then here at the top becomes our high, right? And then here, this low that we made prior, after this previous low here, will be our higher low. Now, in order for price to come up and make a higher high, there would have to be a break of structure. And so then here we create a break of structure here. Maybe somewhere at this point, we have a fair value gap as well here. Maybe like a bullish fair value gap where we break through, we come back and retest, and then price continues, and then that's where we get our higher high. So here, this is a uptrend for you, right? I will make a video that gets more into fair value gaps, what they are, but basically a fair value gap is just a gap in price, right? Where if you have if you have a bullish candlestick, you have three bullish candlesticks, and there's a gap in between those three candlesticks, meaning where basically price just, just kept going and ran through. It was either pretty bullish or it was, pretty bearish, right? And then here, over here to the right, we'll say this is our high here on this downtrend, and then we have our low. So just going back a little bit, when we're talking about a downtrend, we want to see a series of lower highs and lower lows. So here we have our high on this downtrend, and we have our low, right? Now at this point, we have a lower high. Let me get my spelling right today. Okay, this is our lower high. Now, in order for us to make a lower low, again, we have to have a break of structure to the downside. So then here, we'll have our break of structure. And then with that break of structure, we're able to create a lower low. So then we'll name this our lower low. Right? So again, just a recap of, just regular trends, right? We have basically there's three different trends. We have our uptrend that creates a series of higher highs and higher lows, and then we have our downtrend that creates a series of lower highs and lower lows, guys. All right, and then also we have something where it's just consolidation. Now we don't really call it a trend, but it's something that we see every day in the markets, right? And it's just consolidation where the market is just staying in a range and is not creating any type of really uptrend or downtrend, right? It is just in a consolidation range. It's not making higher highs, it's not making lower lows. We're just ranging. And we, at some point we wait for a breakout of this range. So that is consolidation. All right, y'all. So we have one more stop to make before we move forward and we put everything together and hop back into the live charts. So liquidity, right? Stop equals targets, right? Liquidity is all in the market. Like I said, it's something that we see every single day, right? So liquidity is one of the biggest parts of price action. Liquidity is basically, again, stop losses. In the market, really love stop losses. Equal highs, equal lows, previous day highs, previous day lows, sessions, high and lows, as far as New York session, Asia session, London session, right? All of that is liquidity, right? Price will often run to those stops first, then decide to make the real move. So if we're looking at this diagram or just drawing here, right? One thing that I want to point out is what we have down here, which is our sell side liquidity. So sell side liquidity is resting down here. Now, how we not look at any of this that's going on right now, and we're just paying attention to what we have here to the right. If we've already built buy side, we want to come back and take sell side liquidity, right? So this is our sell side liquidity down here where price was down at the low, and then we have buy side liquidity, which is always at the highs. So it is so important to understand where price is at when you're in these markets and looking at these markets. You want to be able to spot liquidity. Being able to spot liquidity will make you a very great trader, right? You want to see where buy side liquidity is, sell side liquidity is, where your previous day high. These are where price often acts as resistance, support levels, supply and demand zones, breakout zones, whichever. You are gonna need liquidity. Liquidity has to be a part of your strategy. So hopping in here a little bit, we have sell side liquidity. Our uptrend so far is our trend so far is an uptrend, right? We have breakup structures, to the highs until we get to buy side liquidity, and then that's when we get a change in direction. Not sure if any of you have heard of a CISD, but basically what I just said was a change in direction, right? So we have a CISD here. I'm sure maybe there was some type of bearish fair value gap, maybe for us to come down. We sweep this bearish fair value gap up right here. Price displaces, we catch a CISD, and then we come back and retest this, right? And we generate this liquidity. So that's just a little bit about liquidity basics. We're gonna continue to move forward. I'm not gonna spend too much on liquidity because there will be a separate video. But buy side liquidity, sell side liquidity, previous day highs and lows, all of those act has their special position in the market. Price will always move in three phases, right? And I want you to just remember and take notes if you have a notebook and a pen somewhere around you, right? Okay, first, so what price does, it grabs liquidity, it finds a zone, and then it makes the real move, right? So we grab buy side liquidity. Maybe we're rejecting off a 4-hour, fair value gap or something up here. Some type of PDRA. So that was the zone here, maybe that we rejected off of. So that's just the basics, right? Grab liquidity, find a zone, and make the real move. We go from buy side liquidity and we generate sell side liquidity, and that's liquidity for you, right? So if you can spot that pattern, you can spot entries. You can make sure that where your stop loss needs to align during your trade, how much your risk management should be, and all of those good things when it comes down to executing your strategy and your trading plan, guys. All right, so now that we understand liquidity, price action, we understand what an uptrend is, a downtrend is, a consolidation zone, and all of those good things, we're gonna move forward. We're in the live market now. well, not the live market because it is Sunday. Market is closed right now, but we're gonna look at some candlesticks, and see what we can find here. See if we can find a great entry. Now, a very common beginner mistake that many of us has made are marking too many levels, ignoring trend direction, and of course, entering when like entering before confirmation, right? So if we're doing these things, of course it's hard for us to be able to be the traders that we need to be. So something that's very, very helpful, which are two indicators that I use, which is the S&D profile that literally shows where the session highs and lows are sitting, and it kind of just marks out Asia session and London session and New York session, so you can see where what price have been doing, and it's easier to spot the high and lows, right? So here, if we're just looking at the chart right now, we have London high, and then we also have midnight price, guys. Midnight price is always at 12 o'clock, and it is a supporting, basically it's like a important key level, and so currently we're looking at it as sell side liquidity has literally been created, and it looks like prices at open, about to open, and it looking like we're gonna trade up a little bit. Okay, so what we know from now, just looking at this here, we know where our Asia high is sitting, London high is sitting. We know that we still have Asia high and London high that has not been mitigated, but we know we've took Asia low and London low, right? And price just continue to step through. So something that I want to pay attention to is we have a 5-minute bearish gap here again, which is just the imbalance. And in order for us to be bullish, right, we would want to see this 5-minute fair value gap be fully inversed, maybe even retest it after a break, and then we can see a shoot to the upside. But until then, we keep our we still are making sure that we are seeing if we're staying patient if sales do want to continue, right? So what I like to do is after I mark up and see where my session highs and lows and stuff are, we want to go ahead and just turn these indicators off, right? Just to clean up any type of noise that we're seeing. We don't want to be confused. We don't want a lot of stuff on our charts. So we're gonna go ahead and just let this play out. Right, and we see price just plays around. At one point we do come up looking like we're gonna break, and we don't, right? So this 5-minute here, basically it is still holding up. At any time price could just stay under this fair value gap, but right now it looks like we are just ranging, right, until we finally come above this 5-minute, right? When we come above this 5-minute, this 1-minute also even gives us a retest. And we also have a CISD, right? Right? And in other words, a CISD is a change in direction, okay? So if this structure shifts from being bearish to bullish, right, that means at one point, with us being so bearish, buyers then took control, right? And we broke above a series of bearish candles, or whatever the case may be, for this typical this typical example here, right? So we have a CISD. Not only do we have a CISD, but we also have a bullish fair value gap. And then from there, guys, we could enter here, right? And of course our stop loss could be at these lows, right? And then what we want to target is the opposing liquidity. So again, sell side has been created, right? I'm sure maybe we get some type of SMT divergence, where ES sweeps these lows, but NQ doesn't, right? And then that bullish structure come in, and then what we want to target is maybe midnight back up to midnight, or we can target London high, right? And we can just see if this plays out, because I'm not always right. I just literally picked a random spot in the market, and we can just watch and see if it takes buy side liquidity, and we're steady, generating that buy side liquidity after that sell, after we've taken sell side, right? And it just keeps going. So either way, this was a 170 point target. And I mean, we could have been out of here and took 60 points throughout this whole thing, you know what I'm saying? So this, all it is a matter of knowing where you're in the market, being able to spot higher time frame liquidity, being able to see where your session highs and low are. Again, so these are one of the most important. I'm gonna go through and I'm gonna just show a little bit more examples here as well. Now again, I'm just gonna go ahead and throw on my market profile. This is just at 720, so we want to get closer to market open. All right, boom, there we go. All right, now, so if we're paying attention to it here, we're on the 5-minute, right? So we see that previous day high has been taken, right? London already has swept Asia's high, so only thing that we really do have left is we can mark out London's high here. Well, I'm sorry, that was London low. We can mark out London's high here. Okay, and then we have London's low. All right, and also we can just pay attention to not a significant one here that we really have to pay attention to, but still, let's just see how we react to midnight here. So what we're gonna do now is we're gonna go ahead. Let's turn the indicator off. We know where we're at. We'll just let market play out. Boom. So even before pre-market, we go ahead and take London. So we've already taken London. Pre-market has already taken London. So we know that we are very, very, very bearish. I mean bullish. Sorry. We know that we're very bullish. All right. We finally open after taking London high. Right. Price opens. Market opens at 9:30. We've already created a CISD on the 1-minute. Right. Bearish structure. Right. We failed to break this high. Come any higher. We have a bearish fair value gap here. 1-minute fair value gap. Okay. And then we have a bearish fair value gap here as well. So right now, price is really sustaining bearish structure. We've came back to midnight price. We want to wait. We're still being patient, right? Because nothing has played out yet. Yes, we would have probably had a great entry here, right? We created this CISD here. Okay. Where we broke it, we got a break and retest of the CISD. So we broke, we came back and retested, right? And inversed this 1-minute fair value gap that we have here. So how this could have played out was London high swept. We got a CISD, 1-minute CISD. Nice 5-minute CISD too. Right. We inversed a bullish fair value gap. From this point, we could have been here. After breaking, stop loss may be here at these highs. And we could have targeted midnight's price, or we can target London. And there we go. All right. So just a quick breakdown of this one here, right? We take buy side liquidity, London high, which is swept at pre-market. We get a 1-minute CISD, right? So we go from being in the uptrend to where now we broke a series of up close candles, Not only do we just really break that CISD, but we come back and retest, right? Now, before we come back up and really retest that CISD, we get a bullish fair value gap that is once inversed, um, which leads us into very bearish structure, and we're able to go from buy side liquidity taking sell side liquidity. And if we just look to the left, this is a sell side liquidity area down here. Okay, so guys, this here for you. I know I didn't give a lot of examples, but it's many more to come. This is not the end, right? So today we've been able to do a lot, right? Just going all the way back from learning candlesticks and what they mean. We've been able to spot a lot. We've been able to spot what a bullish candle is, what a bearish candle is, what price action is. The three different trends that we have: uptrend, downtrend, consolidation, just ranging zones. We've been able to spot support and resistance in some levels where liquidity lies. We've also been able to spot some things that we'll get deeper into, which are PDRAs. We've talked about order blocks. We've talked about fair value gaps, CISDs, change in structure, right? Midnight price, different key levels where price acts, reacts, key levels and key zones, and stuff like that. So we've learned a lot. This kind of wraps this video up because there will be more to come. I don't want to just mash everything in one video. So guys, thank you for watching this far. Give this video a thumbs up if it was very helpful for you. We'll be coming with our next video. Maybe it'll be about liquidity. We get deeper into that. Maybe about some fair value gaps. So y'all, this is the beginning. This is not it. And again, appreciate you for watching. Please be sure to send this to a friend that's been wanting to learn trading. Also, we have a free Discord community where I'm dropping the link in the bio. You guys join up, okay? I'm continuously where I'm going live every single day, posting free educational content, okay? So help a friend, tell a friend to tell a friend. Start day trading this year. I challenge you guys. That's what I want to talk about. I challenge you guys that are watching this video right now to learn something new this year. Step out the box, okay? So thank you guys for watching, and we'll be back with another video.